Okay, so good evening, good morning, good afternoon. Kefosu here again. I'm here to take you through a powerful video course called Top Down Analysis. Okay, so this analysis combines all what we've learned, starting from market structure down to order block theory to liquidity, AMD, everything that we've learned. This topic combines everything to give you a setup. Okay, so all what I mean is that this is the final stage or the video that you need to combine everything in order to get your powerful setup. Now, as we all can see, this is Euro GBP AUD, that is the Great British Pound against the Australian dollar. You get it. So, in order to get a setup or get a signal to trade, you need three things. Okay, so let me start by typing the three things so that it will serve as a guidance. Okay, it will serve as a guidance. So the first thing you need here is your structure. You need your structure. Now that's the same as the trend. The structure is the king of everything. The structure is the king of everything. Okay, now the second thing is you need your point where the market is likely to reverse. You need a point of interest. It can be breaker block, it can be an order block. That bearish order block, bullish order block, they are all point of interest. Okay, so you need a point of interest. I don't think that. Oh, okay. Let me see. Interest. Okay, so there's the correct spellings according to grammar. Okay, so I normally call it POI. That's point of interest. Is there any wrong again? Oh, okay. Point of interest, POI. And the last one is confirmation. 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 Good. So let me number them. First one, second one, and then the last one, which is the third one. Okay. Let me make it 24 so that you can see it big. Let me bring it here, and then remove the watermark so that you can focus on these three things. Okay, so now these are the three major things that you need before you can get a setup or before you can get a confirmation for a trade. Now the first thing is structure. Okay, so you first have to analyze the market, either it is bearish or bullish structure. Normally, I stay out of ranging structures because ranging structures has a lot of liquidities, either buy side liquidity or sell side liquidity. So I stay out from a ranging market. Good. So now I either join the bearish trend or the bullish trend. That is, I either trade the bearish market structure or the bullish market structure. So as a swing trader and as a long-term market analyst, I start this from the daily. Okay, so I do this on the daily time frame, and I do this on either the 4 hour, 4 hour, 3 hour, 2 hour, or 1 hour. Okay, so either the 4 hour, 3 hour, 2 hour, or the 1 hour. Now the confirmation, I do it in that 15 minutes, 15 minutes, 5 minutes, 3 minutes, 15 minutes, 5 minutes, 3 minutes, or 1 minute. Good. I'm going to talk about each and every one of them. So I determine my main structure from the daily time frame because as a swing trader, I think the daily structure is going to give me the overall picture of the market. If the daily structure is not all that clear, I can go up to either the monthly or the weekly structure to, the monthly or the weekly time frame to know overall structure of the market. Okay, so now after determining the structure either being bearish or bullish, I then look for my point of interest. Okay, either a breaker block, a liquidity engineering zone, or an order block, being bearish order block or bullish order block. Okay, so now after getting my point of interest, I now move on to either 15 minutes, 5 minutes, 3 minutes, or 1 minute where I can see a clear structure. Okay, where I can see a clear structure. So after taking my structure, I go to the point of interest and then my confirmation. So you need these three things in order to be able to get a signal or a setup. So I suggest you write these three things down. Now let's go and use GBP AUD. This is GBP AUD, that is the British pound against the Australian dollar. Now I determine my main structure from the daily time frame. So let me bring the watermark so that we can all see that we are analyzing in the daily time frame. So you can see that for the previous weeks or the previous days, GBP AUD has been bearish. Why? Because it is forming a lower low, higher low, lower low, higher low, lower low. Good. Let me change the color of my line to maybe white so that it will be different. Good. Now, I told you that in the market structure video, I told you that the structure can be said, we can say that the structure is changed only if the last lower low, that is from bearish to bullish, only if the last, lower high is broken. Okay, only if the last lower high is broken. And here you can see that the market went ahead to break the last lower high. Good. So now you can see that we've changed from bearish to bullish. So now I have to look for a buy orders, a buy opportunities, a buy setups. So the first rule is confirmed. We have a structure which is a bullish structure. Now we scale down to 4-hour time frame. 4-hour time frame. We scale down to 4-hour time frame, and then what do we have to look for? We look for order blocks and then breaker blocks. Order blocks and then breaker blocks. So you can see that here, how I'm just coming to explain how I got over 250 pips from last week's trade. Okay, last week's trade. Now you can see that I've not taught you liquidity engineering, so I will not bother you guys concerning liquidity engineering. So we had a liquidity engineering here, but also we have another breaker over here. We have another breaker block over here, because this was an order block, okay, which got violated, so it becomes a breaker block. So the market mitigated this breaker block, went ahead, okay, and it was returning back. The market went ahead here, or over here, to this area. Okay, the market went to this area. This area is the place I'm talking about. Okay, now, so we've gotten the trend to be bullish, and the market mitigated this breaker block. Now, what do we have to anticipate? Let's assume that the market is still here. Okay, just from left, from the green line to left, the market was here. Good. So what do we have to look for again? What do we have to look for? What do we have to look for? Oh, sorry. There was also another break of structure here. This BOS. Okay, so let me label it again for you guys. This BOS. And here we have a BMS. break of market structure. Okay, so now good, good. So now the market came here and then went up again. Okay, so we don't have any valid order block here. This is the zone I'm talking about. From here right down to here. Okay, we don't have any other block here. So let's go to this 4 hour. Let's go to 2 hour. If we can see any other block there. No, 2 hour, we don't have any other block. Let's go to 1 hour. 1 hour, let's see if we can get the other block. Yes, yes, we have the other block over here. We have 1 hour order block over here. Very, very powerful order block. Why? It was the last bearish candle that broke this structure, took this structure. So this is a point of interest because it is a 1 hour order block. Good. Now I wouldn't have placed my stop loss just below the order block because there is just a liquidity engineering over here. So I could have added it here, this place, or in 4 hour. Let's go to 4 hour and find the liquidity engineering. Don't be confused. I said I will teach you, so don't worry if you are confused. Never worry at all. Okay, so let's go to 1 hour again. I hope the other block they have taught you guys, so you guys can spot an order block, and this is a clear order block. And let me tell you this, order block is violated only if a body is closed either below or above it, not a wick. So this order block wasn't violated. Why? Because it was just a wick, and we need a body, a full body to close below it before you can say that the order block is violated. Good. So now let's go here. Let's go to this place. So our first point is valid because it is bullish. Our second point is valid. Why? Because we have a bullish order block. Now it's left with confirmation. So you scale down to 15 minutes time frame. In 15 minutes time frame, we had our strong break of structure over here. Okay, break of market structure over here. Is BMS. Is BMS. And you can see that this is a valid order block, 15 minutes order block. Why? Because it was the last bearish candle that took out that structure. Good. That took out that structure. Oh. This was a today's trade, but before that, let's current setup. But before the current setup, let's see something over here. If you can spot this, I'll be very, very happy. You see, internal, this was an external break of structure, but internal break of structure, we have this too. We have this break of market structure here. Why? Because it was the last lower high. Let me draw the structure for you to see that it was the last lower high. Lower low, lower high, lower low, lower high, lower low, lower high, then lower low. So this lower high was the last lower high. That is the last swing high for the bearish structure. And they took it out. And which candle took it out? This candlestick, the last bullish bearish candlestick, took it out. So with this confirmation, your stop loss should be the low where the stop loss should be here. Here. So the low where the market made before breaking this structure, okay, should be your stop loss. Your stop loss should be below this order block. Take note. It should be just below this, the last low that the market made here. This last low they made before they broke this structure. So this, like me, your setup, your entry will be here, somewhere here, and then your stop loss will be below this low, okay. GBP AUD pips is different. It's quite different from other ones. If 58 pips, it will be about 20 something pips. Yes, the currency pairs, they have different pips measurement. I will talk about them later. So now, and it went up to about 300 pips. Yes, it went up to about 3. This will be about 250 pips. Okay, so we had one, we have the market to be bearish, sorry, changing from bearish to bullish. Two, we have the 1 hour order block. That's the 1 hour POI. This, let me label it for you to know. 1 hour I think I have it in my test list. 1 hour POI. Nice one. So we have our POI 1 hour over here. And remember, we have this break of structure, another break of structure here. Okay, and this order block was the last bearish candle that took this structure, so it becomes the confirmation order block. Okay, the confirmation order block. So you took your entry here, and then your stop loss will be here. Stop loss will be here. So this is a bearish setup. Okay, this is this is a bullish setup. Remember, let me start again. Remember, let me go to daily time frame and then start everything fresh. This is a clean setup. Remember, we have the daily break of structure to confirm a bullish here. Remember this, okay? And when you go to 1 hour, is the 1 hour that we had the order block. When you go to 1 hour, you can see that there was a valid 1 hour order block here. A valid 1 hour order block over here. Good. After that, when you go to 15 minutes time frame, go to 15 minutes time frame. Okay, let's go here. When you go to 15 minutes time frame, you can see that, okay, this will be very, very clear. You can see that there was a break of structure here, break of market structure here, 15 minutes break of structure here. That's a confirmation for us to know that indeed the market is going to buy, it's going to go up. Okay, so now we had a bearish last candle who took this structure out, who caused this break of market structure, so it becomes our bullish order block, 50 minutes POI. Now, what did I say? I said that your stop loss will be here. Stop loss will be here. The last low that took the structure. Okay, so your stop loss will be here. Stop loss will be here, somewhere here. Okay, and your take profit will be a liquidity. You target a liquidity, either equal highs, fair value gap, equal lows. Okay, anything. So you target the liquidity. Nice, hold on. Okay, so I'm very, very sorry, I got interrupted, so I'll pause the recording. I'm back. So now let's look at bearish setup. Okay, bearish setup. Now the reason why we call this top-down analysis is because it starts from the top, which is the higher time frame. Okay, so now we can see that. From the daily time frame, AUD-CHF is currently bearish. It was bullish. Why? Because it's higher high, higher low, higher high, higher low, higher high, and then they broke the last higher low to confirm bearishness. Good. Now, since they took this out, what will you be looking for? We'll be looking for some setup. So what are we looking for? We will be looking for bearish order blocks, and then bearish breaker blocks, and then bearish liquidity engineering. And I've seen a strong, okay, let me pause for liquidity engineering for now. Now let's go to 4 hour and see if you can spot any other block. Okay, now let's assume that the market was still here. Okay, I have a problem with my MasterCard right now, so I will have subscribed for the premium and then play the market back, and I will do so in our Zoom meeting. We will get a playback for you to get better understanding. Now let's assume that from the green line to the left, that is where the market is. Let's assume this part is not included. Okay, let me hide it. That would be better. So let's go to 2 hour and see something. This is a 2 hour time frame. 2 hour time frame. We have you seen that we have a bullish candle here? The last bullish candle that took this. Now, this is not a valid order block, because you know what a valid order block is. It must have a fair value gap. This is a fair value gap. Okay, indicating that indeed it was the market makers who caused this break of structure. Okay, now the second valid thing is it should be in premium. So let's plot the Fibonacci from up to down. Should be in premium, and this is in premium because it is just sitting on the 61.80 Fibonacci, which is in premium. Okay, I've told you below 50 is called discount, above 50 are called premium. Good. So this is a valid order block. Now, so the market started pushing up here. Market started pushing up here, pushing up here, pushing up. It came here and then it dropped. Okay, and then it dropped. That is why you need to set two take profits. The first one should be here, the second one, and then when you're in profit, you move your stop loss to entry. Okay, now good. Let's see if you could have gotten a confirmation. 15 minutes. Let's see if you could have gotten a confirmation over here. Now 15 minutes. Let's assume the market was here, this area. So let's hide this. Let's hide all these areas. Good. So 15 minutes, we don't see any beautiful structure here. Let's go to 5 minutes. 5 minutes time frame. 5 minutes time frame. 5 minutes time frame. 5 minutes. No. Let me go to 1 minute. You can see that over there so that you guys will understand everything. I want you to understand everything that I'm teaching. 5 minutes too. I don't see any valid break of structure over here. Any valid break of structure over here. Okay, so I couldn't have entered this trade. If I could have entered this trade, I'll be using risk entry because I don't see any tangible structure here that is supposed to be breaking, so that you will have a confirmation, because it should be something like this. You get it? Something like this, something like this, something like this. Mitigate this other block, break this structure, come here and then drop. But you can see the whole bullish candle. It is not a nice structure here. Okay, it is not a nice structure. So now if you want a confirmation entry, this is where you have to wait for break of market structure here, this area, because this is the last lower low before we push up. Okay, we had this impulse move. Good. So let's go to 15 minutes. We have the same over there. 15 minutes. So 15 minutes, we have this break of structure, and when you plot the Fibonacci from the high here to this area, 61 here, there is a liquidity above, but we are not concerned right now. I will explain that later, but let's understand the confirmation entry first. Okay, so you can see that when the market came back here to the 61 point something, the 61 Fibonacci, it started to do what? To drop. The market started to drop. This one is called confirmation entry. So your stop loss will be here, somewhere here. Okay, so let's go to 5 minutes. You see an order block over there. Now I spotted this. Okay, I spotted this entry. What's a 5 minutes order block here? Here, this one. It got mitigated, but it's still valid. Now, this is why I'm saying that it got mitigated. You see, if you say that the order block is mitigated, meaning a candlestick has tested it. Okay, candlestick has tested it, and this candlestick tested this order block. It dropped. That means this order block is mitigated. Here it got mitigated again. It got mitigated again, and I think this is the final mitigation for it to drop. Good. So we can see that this order block is our confirmation entry. Good. This order block is a confirmation entry. Very powerful one. Stop loss will be here. Now we didn't take this trade. Why? Because let's go to forward time and let me teach you something. Let's go to 2 hour. 2 hour or 1 hour. Any of the time frame I saw. Yes, there's a clear liquidity here. We deleted the sell limit because of this. This is a liquidity here. Clean liquidity, there is no doubt. Equal highs. Okay? Equal highs. So me, I focus on long term. The market can sell. It will sell, but it will sell for a short possible time. Maybe somewhere here. And I hate that. I want a long term returns. Okay, the market will sell to somewhere here. Somewhere here. Okay. And then come back to take this liquidity. Maybe go high and then do the final drop. So I wait and then get the final drop. So as I was saying, this is the confirmation for bearish setup and then bullish setup. Once again, don't hesitate to enter my DM if you have any questions. So top-down analysis in summary, you start from daily time frame to determine the structure. That's the overall structure. 2, you go to the you go to the 4-hour, 2-hour, or 1-hour to find your valid order block or breaker block to get your point of interest. 3rd, you wait for confirmation entry on either the 15 minutes, the 5 minutes, 3 minutes, or 1 minute, where you can find any good confirmation entry. So thank you very much, and then see you in the subsequent videos.